Capital Gains and TDS on Property Deals, 2025, What Sellers and Buyers in Bengaluru Must Know. Namaskara, I'm Krishna Mohan from Udaysagar Mortgage Broker. If you're selling or buying property in Bengaluru in 2025, this video explains capital gains tax rules, how much TDS buyers must deduct at registration, exemptions you can use under sections 54/54 EC, 54F, and special rules for NRIs. I'll also give quick examples so you know what to expect at the sub-registrar's office. Difference: short-term versus long-term capital gains, plain and practical. First, the main difference: short-term capital gains, STCG, apply when you sell property held for less than 24 months. Gains are added to your income and taxed at your slab rate. Long-term capital gains, LTCG, apply when you sell after 24 months. Important update: since July 23, 2024, the government introduced a new LTCG option. You can be taxed at a flat 12.5% without indexation, or continue with the older option 20% with indexation for properties purchased earlier. Check which option lowers your tax bill. This change affects many sellers, especially those holding older properties. Practical tip: before choosing the new 12.5% rule, run both calculations. For old purchases, indexation may still be better. How much TDS must buyers deduct at registration? When a buyer purchases a movable property for 50 lakh rupees or more, the buyer must deduct 1% TDS on the higher of the stamp duty value, SDV, or the sale consideration and deposit it to the government using Form 26QB. The buyer must obtain a TDS certificate, Form 16B, for the seller. This rule is mandatory and enforced at the time of registration in most states, including Karnataka. Quick FAQ: if the agreed price is below 50 rupees L but the SDV is higher, TDS is on the higher figure, so confirm SDV before paying. Exemptions: Sections 54, 54 EC, 54F, How to Save Tax. Now the practical ways to reduce or avoid LTCG tax legally. Sections 54, 54 EC and 54F. Section 54. If you sell a long-term residential property and reinvest the capital gains in another residential house. Purchase within 1 year before or 2 years after sale. Construction within 3 years. You can claim exemption on the portion reinvested. If you don't reinvest immediately, deposit gains in a capital gains account scheme before filing ITR. Section 54 EC. Here you invest the LTCG in specified bonds, like NHAI, REC, PFC, IRFC, within 6 months of the sale. The maximum investment limit is 50 lakh rupees, and the exemption is on the invested amount. These bonds have a 5-year lock-in. This is a popular route if you don't want to buy another house immediately. Section 54F. If you sold any long-term asset other than a residential house, say land or shares, and invest proceeds in a residential house, Section 54F gives exemption. But conditions differ. You must not purchase more than one new house within the specified time, and the exemption is proportional to the amount invested. Practical example: if you sold a house for 1.5 crore rupees and LTCG is 50 lakh rupees, you can invest 50 rupees L in 54 EC bonds and reduce your taxable gain to zero. But your money is locked for 5 years. Special rules for NRI property sellers. NRIs face extra steps and often higher withholding. When an NRI sells property, the buyer must deduct TDS at the applicable rates, typically 20%, with indexation, or the new 12.5% option for LTCG, depending on date, choice, and 30% for short-term gains, plus applicable surcharge and cess. NRIs also need to provide Form 15CA, 15CB for certain transactions and may have to get a lower withholding certificate from the Income Tax Department if they expect lower tax on calculation. Important note: NRIs should verify whether they can choose the 20% plus indexation path or the 12.5% flat option, and consult a CA because indexation can still be beneficial for very old properties. Also, NRIs must ensure PAN is quoted, otherwise TDS may be higher. On-screen text: NRIs, TDS may be higher. File 15CA, 15CB. Consult CA. Practical steps at sale and registration. Checklist for sellers and buyers. Seller. Compute STCG versus LTCG. Decide on reinvestment or 54 EC bonds. Keep purchase documents and improvement receipts. Buyer. Verify SDV, file Form 26QB, deposit 1% TDS, collect Form 16B for the seller. Both. Keep ICE, Form 26AS reconciliation ready at tax filing time. For NRIs, ensure 15CA, 15CB if required and allow extra time for NRO, NRE repatriation paperwork. Thanks for watching. To summarize, STCG taxed at slab for holding less than 24 months, LTCG taxed under the new options, 12.5% without indexation or 20% with indexation. Buyers must deduct 1% TDS for deals is greater than or equal to Rupee 50L. Sections 54/54 EC, 54F offer legal ways to save tax, and NRIs have extra compliance. If you're selling property in Bengaluru and want help calculating gains, TDS, or planning reinvestment, drop a comment or WhatsApp me. I'll guide you personally. Don't forget to like and subscribe for weekly property tax and loan updates. Disclaimer: this content is for educational purposes only and does not constitute legal, tax, or financial advice. Tax laws and rates change frequently. The new LTCG options and TDS rules cited here are based on government notifications and industry sources as of 2025. Double check with a qualified chartered accountant, CA, or tax lawyer for your specific facts before acting. Udaysagar mortgage broker, Krishna Mohan is not a tax consultant.